Whilst the IMF expects global growth to pick up in 2014, the biggest story on the economic front is the US. To tell us why you should buy big global companies in the year of the greenback, we're joined by leading business journalist James Dunn. James, welcome to the program.
Good evening, Marty, and Happy New Year.
Happy New Year to you as well. So, great to have you on the show. First up, just a bit of an update. How did the market fare today, mate?
Up 0.16%, so really, literally and figuratively, nothing to really write home about at all, Marty. It's still very early in the year, and I'm sure you would notice from where you spent summer at the beach that most of the finance community has not yet wended its way back from holidays, Marty. You and I are very much the outliers there.
So, well, I don't think my tan is as good as yours, James.
I'm being a bit flippant there, Marty, but the fact is that the slowdown or the shutdown in the Australian economy is starting to look like that in Europe, where they take August completely off.
Yeah.
Where people used to have the Christmas and New Year break and then get back to work, that's a rarity now, and that is actually shown up in the stock market. There's volume is way less than normal, and really you can't tell much about what's going to happen to the stock market in 2014 from the first few trading days in January, because hardly anyone's active.
Okay. Now you're going to talk to us about a story you wrote in the Switzer Super Report, and it was called "Buy Big Global Companies in the Year of the Greenback."
That's right.
But before you do, we've just set a bit of the scene. What did the Aussie dollar do today, and what's it currently buying? And in your expert opinion, and from all the people you speak to in the industry, where do you think it's heading?
Well, it's just under 89 cents. So look, Marty, March 2013, I was in New York enjoying the 103 exchange rate and buying like there was no tomorrow, because the amazing gift of above parity exchange rate, lower US prices to begin with, and quite often sales, and they'd even give you discounts because you're Australian. So buying stuff really cheaply. And now, of course, we're looking at 89 US cents, and it is going to go lower over the year. I should also say that it's never a linear progression in the the FX market. The dollar didn't just go from 103 to 89 cents today in a one-way fashion. It's very volatile. I think it ranged from memory over about 14 cents, 14 US cents over 2013. So it's an extremely volatile currency. But Marty, the trend is overwhelmingly going to be lower again, and that's not because people have suddenly decided that they don't like the Australian dollar or the Australian economy is a dog. It's simply what's happening on the other side of that cross, and that is the US economy is recovering, and the US dollar is going to recover on the back of that. So that means, quite simply, that the A dollar falls. And look, that was the case on the other side. When we went to 103, it wasn't that people were in love with the Australian economy or the Australian dollar. It's that the quantitative easing they were doing in the US was putting pressure on the US dollar, and that's why our currency was rising. So this year the theme is going the other way. The greenback is going to strengthen, Marty, and the Australian dollar will fall on the other side of that.
Okay, very, very good point. So tell us about the story you wrote in the Switzer Super Report.
Well, look, asked to look at 2014 investment themes, and that's probably the major one. The fact is the US still has near zero interest rates, and that's not going to change quickly. What they have done, of course, is started to taper off a bit on the stimulus, the quantitative easing. So they were buying $85 billion a month of bonds and other assets. Marty, they've sunk that or cut that to $75 billion. So they're still stimulating quite heavily, but it's pretty clear that they're moving towards incrementally taking that stimulus away. Now, they're a long way from saying, look, there's no more stimulus, but less stimulus is the theme that investors have to look at. And that really means that the US dollar starts to recover. And so I think that, and I'm not obviously alone in this, that 2014 will be a year in which the greenback strengthens. That's one of the major investment themes. The other one, Marty, is that people are looking or hoping, wishfully thinking, for some sort of synchronised global economic growth. Now, that would mean that you had all the major economic blocks of the world growing at the same time, so China, Japan, the United States and Europe. Now, that is possible this year. It hasn't happened since 2010. And the United States is the wild card in that, Marty. So you've got the International Monetary Fund looking for 3.6% global economic growth this year. China growing at about 7.5, 7.6%. But the wild card, which could lift that IMF figure, is the United States economy performance.
So last quarter, growth annualised at 4.1%?
That's right. I think that's the second half of calendar 2013. It was a lot stronger than the 3.5% they were getting in the first half of the year. We've spoken many times on this program, and so would a lot of other people, about the kicker that they're getting from the cheaper energy that shale oil in the United States is bringing to them. Manufacturing, consumer spending, business spending, the housing market in the US, they're all on the upsurge, Marty, and that's a very big impetus for the global economy.
And obviously employment as well.
Well, that's right. And the employment is the wild card for when they lift interest rates.
Absolutely. So, James, what companies on the ASX 200 will benefit from a falling AUD and a rising US dollar?
Well, the companies that benefit from the United States dollar, you've got the companies that, first of all, those that actually report their earnings in United States dollars, Marty, they'll benefit as the United States dollar gets stronger. And you've got BHP, Rio Tinto, 21st Century Fox, News Corporation, Fortescue, QBE, CSL, and companies like that, ResMed, the medical device maker, or Computershare, all of those companies instantly benefit because the strengthening US dollar, they actually report in that currency. And then there's others that have large portions of their revenue and profits coming from overseas. And in that you've got Cochlear and Sims Metal Management, Treasury Wine Estates, Amcor, Sonic Healthcare, Ansell, Adelaide Brighton, Orica, Aristocrat Leisure, Navitas. Those kinds of companies that have large cash flows coming from abroad. Look at somebody like QBE, Marty. Both the United States operations of QBE and the European operations of QBE are bigger than the Australian operations. So obviously currency is very important to a company like that.
And some of the companies you mentioned before, Cochlear and the like, they're companies that will benefit from growth in, say, Europe and the UK economy?
Well, that's right. A lot of these CSL, a lot of these companies have very, very large exposures to the European economy as well as to the North American economy. And when we look at currency, of course, everyone looks mostly at the United States dollar, but Marty, the pound, the British sterling, that's at a 4-year high against the Australian dollar. So, and the euro's in a similar situation, not as pronounced. So all in all, it's very good news for the companies that have exposure to and revenue flows and profit flows coming in from North America and Europe. They strengthen their Australian dollar earnings as those currencies are stronger.
And James, you made a very good point in the article, though, as well, that I think is very important for investors, that it's still important to note that the performance of the company is more important than the currency movement. Sounds pretty obvious, but something we should always keep in mind, right?
Well, that's right. And if we look at the example of BHP, I think on 2013 figures, if the US dollar falls a cent, that adds $110 million to their earnings. But if the every US dollar per tonne that comes off the iron ore price then takes that $110 million away. So if you're looking at the miners, Marty, you've got the variables of currency and the variable of commodity price, and they don't always work the same. So that's got to be taken into account. The second point that you brought up is obviously performance of the actual company is the main thing that's, over the long term, that's going to be why you invest in it, is you're looking for performance of the company. For example, I mentioned before QBE, very large US dollar earning streams, very large revenue from the US dollar, but of course it had that shock write-down in December, which the currency effect virtually meaningless when the company's performance is all of a sudden looking not as good as the market had thought. They slashed the share price. Another example of the same sort of thing is Treasury Wine with the $160 million write-downs on the 2013 result because they overestimated the inventory they were holding in the United States. They had to destroy wine they couldn't sell.
Yep.
I mean, it's no use having a currency benefit if those sorts of things are happening operationally.
And that, James, we've got to go to an ad break. That's very good advice. Thank you for coming on the show, and we'll talk to you very soon.
My pleasure, Marty.
After the break, investment expert Paul Rickard will tell us where he's investing in 2014.